Hello everyone, hope you all are doing well. Welcome to today's class. In the last class, we discussed October November 2024 A level accounting exam, paper variant 2-1, and we discussed question number 1. So, in continuance of that, today we are going to discuss question number 2 of that same exam. So, without wasting time, let's get into it. The first question is about Deepak. Deepak maintains a full set of accounting records. The trial balance at 30 September 2024, which is the year end, did not balance, and the difference was posted to a suspense account. So this means that a suspense account exists, which only exists if a trial balance does not balance. So the sales ledger control account and the purchases ledger control account are part of the double entry system. The following errors were discovered. This means that this question likely pertains to the errors and to rectify them. So let's move on to part A and see what it requires. Prepare journal entries to correct each error, right? And narratives are not required. So we're going to go over each point and make the journal entries that are going to correct the errors, right? Not just tell the correct entry, but to correct the errors that are already made in the financial statements in the accounting records. So the first one, a check received of $610 from Sanjay, a credit customer, right? A credit. So the things that were sold to him were on credit. So the entry would be receivable debit and, you know, inventory credit. Sorry, receivable debit and sales credit, right? And when he paid the money back, the entry would be bank debit or check debit and receivables credit. In this case, however, the check had been dishonored by the bank, but no entry had been made in the books of accounts. So initially, the entry for receiving the check had been made, but when we went to cash the check, the bank said that it would not be able to do so. So this means that we have not received the balance. So we have to reverse the bank balance that we thought we had received, and so the bank would be credited. And the amount that we thought we had received of $610 that we had received, so it was not receivable anymore from Sanjay. We are going to have to debit that back. So in this case, what we are going to debit is sales ledger control account, and we are going to credit bank $610, right? That is it for the first one. Moving on to the second one, goods returned of $240 by Kamal, a credit customer. So goods are returned to us, have been credited to the sales ledger control account and debited to the purchases account. So what's wrong with this? Hmm? What is wrong in this case? Whenever our goods are you know uh, received by us as returns, the correct entry in this case would be sales return debit, and credit would be sales ledger control account. And in this case, instead of sales return, they debited purchases, which is incorrect. However, this is correct. So what we are going to do is we are going to reverse this, right? And we are going to enter sales return in that case. So let's just do that. We are going to reverse this, and we are going to debit what we actually should have, which is sales return. Sales returns debit and purchases account credit. The amount was $240. $240. Right? Now, moving on to part 3. Goods returned of $150 to Kohli, a credit supplier, meaning we returned the goods to our supplier, had been correctly entered in both the purchases return journal and the purchases ledger control account, but had been posted to the debit of the sales return account. What does this mean? This means that the returns to a supplier, Kohli, of $150 were correctly handed in the purchases ledger control account, right? This is correct. However, instead of crediting the purchases returns account, we credited, we, however, instead of crediting the purchase returns account, the sales return account was incorrectly debited. The sales return account was incorrectly debited. So now what? Now we not only have to reverse this by crediting it, we also have to credit the purchases returns journal. Right? We understand this. This is to reverse the incorrect entry, and this is to credit the actual, the entry that should have been made. So let's just do that. Here we're going to come here and we're going to credit sales returns, and we are going to credit purchases returns, and both will be of $150. So now what are we going to debit? The debit space is completely blank. In this case, when we don't have anything to debit it with, we debit suspense account, as the balance of this as the purpose of this is to balance the trial balance. In this case it would be 300, 150 plus 150. All right. Now the last one, credit note of $498 received from Bharti, a credit supplier, had been correctly entered in the purchases returns journal but had been debited to the purchases ledger control account as $489. So in this case, part 4, the issue was that you know crediting this instead of this being credited, the purchase ledger control account, we debited it, right? So what's the impact of this? This is the purchase ledger control account, and in red I'm going to write the incorrect entry. So here it was debited, credit note by Bharti of $489. Sorry, here it was debited here, right? So to offset that, to return the balance to zero, we have to credit it to reverse this, right? So this means that only the incorrect entry was corrected and the balance was just reversed. But in this case we also have to book it at 489, right? So the total balance, the total entry that would come out is going to be $987. Why? Because first we made the incorrect entry of $489 mentioned here, and we are going to reverse that here, and then we will record the correct entry, which was also $489, which is going to come to the credit side, and so the total credit side in this case would be $987. So purchases ledger control account, this is going to be credited by $987. However, there is no debit entry, so what we are going to do is we are going to debit the suspense account, right, by $987. All right. So that's it for the first question. 9 marks that you will gain easily in the paper. All right. So now let's move on to part number B. Prepare the suspense account at 30 September 2024, clearly showing the opening balance brought down. Dates are not required. The opening balance will be brought down. So because it's a suspense account, we will record the entries that we need here. So which of these parts contain the suspense account? Is it the first one? No. The second one also no. The third one, it's mentioned here, so $300, and in the last one it's also here of $987. So whenever we have to enter these amounts, we are going to write these ones, all right? So these are going to be shown in the suspense account. So whenever we, for example, it's being credited here, but suspense account will be debited, so we are going to write sales return debit by 150, because sales return is debiting the suspense account. So we will write sales returns debit by 150, purchases returns debit by 150, purchases ledger control account debit by 987. But these accounts themselves will be credited. All right, so let's just jot them down here. So first off, it will be sales returns, and then purchases returns, and then purchases, I'm just going to write the abbreviation here, purchases ledger control account. All right, so the amounts were $150, $150, and $987, which makes the total come out to be $1,287. So the brought down balance that we are also going to take as um, balancing, this would be also $1,287. This is also balancing. All right. The total here on the credit side would also be $1,287. That's it for this. These are the easiest 4 marks you will see. All right. Now the next one, the trial balance included the following balances, right? Purchase ledger control account of $8,640 credit, and the sales ledger control account debit by 12,420. So calculate the revised balances of the purchase ledger control account and the sales ledger control account. So what are we going to do first in both these cases is we are going to write the balances that were mentioned. Sorry about this. The balances that were mentioned are, initially for purchase ledger control account, this was $8,640, and for the sales ledger control account, this was 12,420 mentioned over here. So now what? Now we will go back to the first part A, and we will going to see if there are any changes in purchase ledger control account and sales ledger control accounts, right? So moving on to part A, the first one is for sales ledger control account. So this one is going to come there. This is debiting that. This is debiting sales ledger control account. So this will increase that, right? So we will add it into the balance. And in the second part, there is sales return purchases. So this is not relevant. In the third one, there is suspense account, sales returns, purchase returns, also not relevant. And the last one, there is suspense account and purchase ledger control account. This is also going to be here. And this balance is being credited, meaning it's also being increased. So yeah, we are going to add this into our current balance as well. So now what? Now purchase ledger control account, they are going to be added by $610, giving us a total of $9,627. This is our answer. And for the sales ledger control account, we will also add this by, um, sorry, my mistake. We are going to add the first one by $987 instead. Apologies. And we are going to add in sales ledger control account, we are going to add $610, giving us a total of $13,030. These are the final balances. All right. I hope this was easy for you because it was overall a easier question. But if anything was a bit difficult to you, don't hesitate to reach out. Reach out at the contact that I have given below or at the end of the video. So see you soon in the next lecture. Take care. Bye bye.